I'm Mitchell Green, and today I'm going to walk you through how I calculate my actual take-home pay. You see, when I got my first job, I received a contract which included my salary, as it should. I looked at the number, but at the end of my first month, I saw a much smaller amount come into my bank account. My take-home pay, or net income, was much less than the amount I had first seen as my salary. So I'm going to show you how you can avoid that shock the next time you get a job offer or a raise. So there's an awesome website called TaxTim that has lots of information and tools for South Africans wanting to know more about tax. So anyone can use it, and there's a salary tax calculator which we're going to use to figure out what our take-home pay is. So at the top here we see calculators, and the very first one is salary tax. So I'm going to walk you through two examples, one fairly simple one and then a more complicated one. So we'll stick with the current tax year, but you can choose an older one if you want. So that's from March 26 to Feb 2027. So let's say there's someone with a monthly salary of 10,000 Rand. So they're earning 10,000 Rand a month, and they don't contribute anything towards a pension or retirement annuity fund. So we can use this calculator to calculate their take-home pay. Assuming they're under 65, the take-home pay would be 9,585 Rand. So it explains here how it is calculated. So your annual gross salary, because remember, your income is taxed over a whole year, not per month, but over a whole year, a tax year. So from March to February for individuals. And then we subtract any pension contributions and any non-taxable portion of a travel allowance. So your taxable income for the year is 120,000 Rand. And so it shows you here for your age group and income bracket, the PAYE or income tax that you would pay on a monthly basis is 315 Rand. So your take-home pay then is your gross salary, 10,000 Rand a month, less PAYE, 315 Rand, less UIF, which is 1%. And so you'd have 9,585 Rand per month. Okay. Now let's maybe look at a more complicated example. So we have someone, let's say they're earning 30,000 Rand a month. We could also put the annual salary or weekly salary, whatever it is. Let's say they do contribute to a pension fund. So this is asking if there are amounts that are deducted from your salary and go towards a pension fund. So that would be, we'll say yes. And let's say they contribute 7.5%, which is 2,250 Rand. And let's say they do get a travel allowance. There are a lot of helpful tips here, like what the source code is on your IRP5, which is the return that you'd get from your employer. And then you can, let's say they earn 1,000 Rand as a travel allowance every month. Okay. And they're also under 65. So we hit calculate, and there it tells you that their take-home pay is 23,500 Rand. So again, it's the same sort of calculation: gross salary, pension, and travel allowance. So it very helpfully explains on this website that you're taxed on 80% of your travel allowance. So 20% is non-taxable, and that amount is subtracted from the calculation to get your taxable income. So because the travel allowance is 1,000 Rand a month, taxable portion would be 800 Rand, non-taxable is 200 Rand, 200 times 12 months is 2,400 Rand. And then this 27,000 is the pension contribution times 12. So the taxable income for the year is 330,600. And PAYE would be 4,000 Rand. So your take-home pay is calculated as your gross salary, 30K a month, less PAYE, UIF, and your pension, which is how they get to that big number of 23,528. Now, when you think about it, your marginal tax rate, so the tax rate that a lot of people refer to when they're talking about tax, income tax, is probably 27% if you're earning 30,000 Rand a month. But in reality, your effective tax rate, which is your total tax divided by your total income, is closer to about 13%. So that's 4,000 Rand per month divided by 30,000 Rand, that's about 13%. So we see that your marginal tax rate, which is how much you get taxed on every extra Rand you earn, is actually much higher than your effective tax rate. So when people say they're paying 27% tax, it's only on a portion, and another portion is probably is taxed at 18%, and then there's the portion that is not taxed or taxed at 0% thanks to the primary rebate. Okay, so that is how we calculate. That's how you calculate your taxable income. And now that you know how to do it, you can go over to TaxTim, to the website yourself, and mess around with the numbers, see what would happen if you earned more, or if you made bigger contributions to a pension fund, that sort of thing. Thanks for watching. Hopefully you learned something and have a better understanding of how your net income or take-home pay is calculated. Please leave a comment if you have any questions or suggestions, if you want something to be answered in another video, or if you want an immediate answer, please let me know. And just a reminder that this video is for informational purposes only and is not intended as tax advice or a replacement for fact-specific tax advice.